Hello and welcome. Today we're going to break down a company that has been an absolute rocket ship on the stock market, Shakti Pumps. We're going to dig into the analysis, unpack the numbers, and figure out what is driving this incredible story. So let's just jump right into the numbers that make this company so interesting.
Okay, first up, just look at this. We are talking about a company that has grown its revenue by over 46% every single year for the past 5 years. That is sustained, absolutely explosive growth. You just don't see numbers like this every day, and it tells you right away that something special is going on here.
And just when you thought that was impressive, check this out. The profit growth over that same time, a mind-boggling 98.7% a year. I mean, that's nearly doubling their profit every year. This isn't just growth, it's a masterclass in efficiency, with profits growing almost twice as fast as their sales. Wild. And to round out our opening numbers, a return on equity of 43%. Now, to put that in perspective, most companies in this industry are happy if they hit 15, maybe 20%. Shakti is more than double that. It puts them in a completely different league and shows just how good they are at turning shareholder money into actual profit.
So when you see numbers like that, you have to ask, right? What on earth is going on? How does a pump company, of all things, become a stock market superstar? All right, let's peel back the layers and get into the fundamentals. So at its heart, Shakti Pumps is India's top dog when it comes to making water pumps for farms, factories, you name it. But that simple description, well, it doesn't really explain that explosive growth, does it? The real story, the secret sauce, lies in the kind of pumps that are driving their success. And that brings us to the big one, the company's massive growth engine, which is solar. You see, you really can't understand the Shakti Pump story without understanding the massive solar revolution that's happening across Indian agriculture right now. So let's look at the powerful forces at play. Okay, now check this out, because this is the key. We're talking about a massive tailwind here. The government's PMKUSM scheme alone is a total game changer, aiming for 10 million solar pumps. Then you add in huge subsidies, plus the fact that electricity costs keep going up, and you have a perfect storm for demand. This is not some short-term fad. It's a huge long-term shift, and Shakti is sitting right in the middle of it. So where's the money coming from? Well, the vast majority, 3/4 of it, comes from selling the actual pumps. And you guessed it, that's getting dominated by their solar products. The rest is split between motors and, importantly, the spares and services, which gives them that nice, steady, recurring revenue. But there are other companies, right? So why are they winning? It really boils down to 3 things. First, they're the innovators. They were pioneers in stainless steel and super energy-efficient pumps. Second, they've built a powerful brand name, even using major celebrities to get the word out. And third, and this is huge, their distribution network is massive. It gives them a reach that smaller players just can't compete with. Okay, so incredible growth, a huge market opportunity. It all sounds a little too good to be true, doesn't it? And that is exactly why we have to ask ourselves, what's the catch? There's always a catch. So let's flip the coin and look at the other side. And this right here really captures the whole puzzle in a nutshell. On one hand, you have these phenomenal, best-in-class numbers, but on the other hand, you've got some pretty serious concerns that any investor has to know about. We're talking a sky-high price tag, some stretched finances, and this thing called promoter pledging. Let's start with that big one. A whopping 60% of the founders' own shares are pledged. What does that mean? It means they've used them as collateral for loans. Now, here's why that's a risk. If the stock price were to drop suddenly, the lenders could force the sale of those shares, which would flood the market and could push the price down even faster. It's a key risk to keep on your radar. Next up is cash flow. It takes Shakti Pumps about 150 days, that's 5 months, to turn their inventory into cash from a sale. For a company that's growing this fast, having your cash tied up for that long can really put a strain on your finances. And finally, we have to talk about the valuation. This table says it all. While their performance, that 43% ROE, absolutely dwarfs their peers, so does their price tag. You're paying nearly 41 times their earnings for this stock, way higher than the competition. You're definitely paying a premium for that amazing performance. And the question is, are you paying too much? So, we've laid out the spectacular bull case and the pretty serious bear case. How do you weigh these two opposing forces to come up with a verdict? Well, let's see what the valuation models have to say. A discounted cash flow analysis basically gives us a range of what the stock could be worth. The base case, kind of the most likely scenario, puts the fair value around 4,850 rupees. If everything goes perfectly, the bull case, it could hit 6,500. But if things go wrong, the bear case, it could fall to around 3,200. And here is the problem. The current market price is 5,820 rupees. That's trading way above the report's base case fair value. In fact, it's trading much closer to the super optimistic everything must go right scenario. That tells us the market has already priced in a whole lot of future success. And this quote from the source report just hits the nail on the head. It basically says, yeah, the valuation looks stretched, the price looks high, but maybe, just maybe, the company's growth path is so incredible and its market position is so strong that it's actually worth it. So what's the bottom line? The final recommendation from the analysis is a buy. But, and this is a really big but, it comes with two very important warnings. First, this is for long-term investors. We're talking a 3 to 5 year horizon. And second, you absolutely have to be comfortable with a moderate to high level of risk, given all the concerns we just talked about. And that leaves us with the ultimate question for anyone looking at Shakti pumps. Is this India's next huge multi-bagger, an incredible wealth creator that's going to keep firing on all cylinders? Or is it a growth trap? Are that high valuation and those other risks just waiting to spring on investors? The answer to that is what will define this fascinating investment story.